ZSE summary there. Market down slightly. Old Mutual Trade dominating there again. Quite interestingly, now we had 1.965 million Old Mutual removed off the register, so we're down to 64 million shares now. Huh?
Yeah.
Go on, Buddy, what's going on there?
Yeah, so I mean, on Old Mutual, I think we've seen the price recovery. It's now back at 8, so we should definitely expect some of the trades to actually happen there, especially during the Old Mutual trade. There's that good arbitrage profit. But just looking also on the ZSE Proplastics price, I was just looking at the share price movement. I think it has almost doubled from August. It was around 9.8. Now it's 22. So that's quite significant in terms of the unbundling process. Some of parts, Masimba and Proplastics. I think it has created value for shareholders.
It certainly has, yeah. It certainly has.
Proplastics results, which are coming up on your screen shortly. Revenue up 50%, GP up 85% as the margin improved to 37% from 30%. Profit after tax up 158%. The dividend has been increased by 211%. A few highlights there. Factory volumes up 20%, sales up 5%. The new factory is 97% complete. Capex outlay of 5.491 million in the period. Earnings of 1.42 cents put Proplastics on a historic P of 15.7. Paschal, are we going to see the same thing next year?
That's a difficult question, but yeah.
Have you traded in the 2 months since? Well, it's 3 months now.
It's 3 months
First
now,
quarter.
The first quarter, yeah. Well, it's picking up. The last quarter for last year had slowed down, and that's how we started
The beginning of the year.
Yeah, but things have started to pick up. So I think generally we'll still have a strong year for 2019.
But now, Paschal, you've been through the hyperinflation period, hey? So, I always tell people we're in about 2003 because what starts happening in this period is revenue outpaces your overheads. That's because ZSE hasn't moved, because the labor price has not moved by as much, and that's why you end up with this fantastic bottom line, because your margins improve by so much in such a short period. And then of course we get the catch up this year, as the workers start demanding more money, as all the price increases from the utilities and everything start filtering through. As you said, your internal inflation measure of 208% is very mischievous. But that's the truth.
Yeah, that's the reality. You're absolutely right. Yeah, because at the moment some costs are still depressed, like labor. You rightfully point out some local overheads. What would be reflecting the actual position would be any foreign costs. Those naturally, because they take into account the market exchange rate. So those are at the right levels. So all these others will start to catch up. So in terms of margins, you're absolutely right. We won't be able to continue at such high margins.
But also, what's the outlook on the sales volumes growth? Because as you know, the top line there is 50%, but most of it is price. What are you seeing right now, I think, in the
in 2019. I think when we come towards the end of the year, the volumes are going to grow. I don't think it will be very big numbers, and it will still be your 5 to 10% growth. Yeah, but we are definitely going to see growth, because when you look at the 50% rise in turnover, it's purely inflation. Look at it, official inflation was 53%. We are talking of 208% internally, so it's purely inflation.
But you did grow your sales volumes 5%.
5%.
Okay.
Yeah.
And what were you growing at prior to the fourth quarter, which is disaster for everybody so far?
Well,
were you up 10% or
about 15 to 20%?
15 to 20.
Yeah, we were.
So you're
really
actually
moving.
negative in the fourth quarter.
In the fourth quarter, it was negative because we slowed down. Well, the general economy slowed down. We also intentionally slowed down because things were not sure. You were not even sure how to price.
Yeah, and you're then giving away value.
Absolutely.
And we've seen this picture before, And as you say, 99.9% of your inputs are inflation, are foreign denominated. And that's why you're sitting on the 208% internal inflation measure.
Yeah, yeah.
And, you know, just to go and talk about inflation quite quickly here, you know, as I've always said, you know, you get somebody like Steve Hanke in the States who says inflation is 240%, you know, and then, you know, you get the government saying it's 60%. But it's a bit like the exchange rate, isn't it? There's levels of inflation. It's not like a one size fits all, because ZSE inflation is 0%.
It's 0%.
You know, so and that is a big component.
Yeah.
But then fuel inflation is now, you know,
Yeah, it's beginning to go up.
Maybe-
No, you're up. It also depends on the basket you are using. So if I were to take the Proplastics inflation and I use the basket of the imported items, it's certainly very high.
It's high,
If I
yes.
also take the ZESA, the water, the labor, it's probably not that high. And then it blends itself in there. So yeah, it also comes down to the basket.
And also on your margins, I mean, the PAT margin is quite significant there, 14.5%. I was just looking at, you know, global emerging market average for construction materials. They're roughly around 6.3 thereabout.
Yeah.
So what's the steady state level of PAT margins that you'd expect, say, in the next couple of years?
Look how they've wanted the 25%. And certainly those figures are way too high.
yeah, look, I mean, this is not normal. You
Yeah,
know.
it's
Look
not
at
a
last
normal
year,
number.
8.43%. Well, you were still doing quite well then. You know, but I mean, look, let's. You've obviously got your internal budgets, which you never give us, guys. Hey? So, you know, I mean, as you say, your margins are going to be compressed in the year ahead, and we're not sort of saying put your neck out there, but as you say, we're certainly going to see growth, and you know, I mean, well, you know, 20-30% on these numbers. Hey, I would say on the bottom line, maybe, or not.
In terms of growth.
It really depends on how your margins catch up.
Oh
you know?
yeah. And certainly they have to. They have to, because if I look at, remember, Jono, in 2019 I'll be reporting in the RTGS dollar.
Yeah.
So if it was a 10% margin on US dollar, that's fine. But if it's on RTGS dollar, then you probably go to do your 20, 25, 30%. But certainly there's going to be growth in 2019. Exact figures, yeah, you're right. I might not exactly say, because the environment is constantly changing.
Okay.
But certainly what we see at the moment, then there's going to be growth.
So what we're going to do is, the boss is now here. We're going to carry on with our normal program,
Sure.
and then we're going to bring both of you here
Okay.
to roast you properly.